What's up, everybody? This is Sunko, the Korean bro. Today is 2023, January 31st, the end of January. And today, let's look at a stock market article, okay? Uh, let's see. 35% of Cathie Wood Flash ETF is invested in just five stocks. Okay. A bull market is coming. Two top growth stocks to buy in 2023 and hold forever. Down 45%. One Warren Buffett growth stocks to buy in 2023. Three things about Microsoft the smart investors know. Okay. The S&P 500 could be about to do something that it hasn't done in over 2 years. My top beaten down EV stocks to buy and hold for the next decade. Two stocks up over 10% 2023 that remain streaming buys. Okay, let's see one by one. Okay. Cathie would like to make big investment in individual stocks. Yes, that's right. While no stock in the Art Innovation ETF makes up more than 10% of the portfolio, Wood is heavily concentrated in a handful of names. Many people know of Cathie Wood's Art Innovation ETF for its focus on disruptive tech stocks. There is arguably no investor more committed to the high-flying tech and crypto sectors than Cathie Wood, the founder and CEO of Art Invest, which manages several exchange-traded funds. Wood's flashy fund, the Art Innovation ETF, is focused on disruptive innovation. Along with the rest of the tech sector, the Art Innovation ETF has had a volatile couple of years, experiencing huge gains in late 2020 and 2021, only to give up those gains in 2022 after soaring inflation and rapidly rising interest rates really cut into the sector. But the Art Innovation ETF is off to a hot start in 2023, already up about 25% amid hopes the Federal Reserve will soon end its rate hiking campaign. Interestingly, 35% of the Art Innovation ETF is invested in just five tech and crypto growth stocks. 9.3% of portfolio is Tesla. And Zoom Video Communication, 8.1%. Large electric vehicle maker and industry that is poised to explode as the world continues to shift away from fossil fuels and efforts to address climate change. In 2022, like many high-flying tech and growth investors, Wood loves your large electric car maker Tesla, which is run by the famous billionaire entrepreneur Elon Musk. Just this month alone, Wood snapped up more than 806,000 shares valued at more than $105 million and made it bold prediction that Tesla stock could jump by 500% over the next 5 years. In 2022, the company grew deliveries by 1.31 million vehicles from 2021, while production jumped 47%. Musk has recently launched aggressive price cuts to boost demand for Tesla vehicles and said that deliveries could hit 2 million this year. Formerly known as Square, Block has created an ecosystem for merchants and consumers offering a broad range of payment solutions and e-commerce tools. Its two main business segments are Block's technology solutions for merchants, which help them process payments and conduct business more efficiently, and the Cash App, which is largely for peer-to-peer payments between consumers. Block continued to see gross payment volume rise across its platform in 2022. Uh, gross payment volume. But investors are worried about how a severe recession might impact volume this year. The Cash App has also seen good momentum and had 18 million active users in September, but the company lost a lot of money last year. Trading at 46 times forward earnings, Block already has a premium growth valuation, but is building a platform with significant scale that should give it an advantage and make it a good long-term buy. Yes, Kathy was is undoubtedly accommodated to disruptive, high growth names in the tech industry, a volatile strategy as investors have seen over the last few years. While such a focus carries lots of potential, retail investors shouldn't abandon proper diversification in their own investing strategies. With that in mind, many of Wood's top choices for the art innovation ETF are still tremendous long-term buys. Top choices from this group are Tesla and Block. Okay. Next, a bull market is coming. Two top growth stocks by 2023 and hold forever. The trade desk operates large independent ad tech platform and continues to gain market share. Atlassian is a leader in team collaboration and productivity software, and its broad portfolio is a significant advantage. Shares of the trade desk and Atlassian trade at discounts their historical valuation. The trade desk. The trade desk operates a leading independent demand-side platform. Demand-side platform, its software automates the media buying process, enabling advertisers to run targeted campaigns across a variety of digital channels. While the trade desk undoubtedly faces tough competition from ad giants like Alphabet and Meta platforms, it distinguished itself with superior technology and a more transparent business model. Specifically, the trade desk DSP features industry-leading artificial intelligence and the world's most advanced data marketplace according to management. Both of those mm, qualities result in better campaign outcomes for marketers. Additionally, as an independent ad tech company, meaning it doesn't own any ad inventory and therefore has no reason to steer ad buyers towards specific content. The Trade Desk offers more transparency than Alphabet and Meta platforms, both of which have reason to steer ad buyers toward their own content. Hmm. Additionally, Alphabet and Meta platforms provide ad tech tools to marketers and publishers, meaning they service the buy side and the sell side of the ad industry. That creates yet another conflict of interest. Meanwhile, the Trade Desk focuses exclusively on the buy side, mm, meaning its values are better aligned with its customers. So the quality helped the company keep its retention rate above 95% for the last 8 years. It has translated into market shares gain over time. In fact, CEO Jeff Green said the trade has gained more market share in the third quarter than at any point in its history. Quarter third revenue climbed 31% to $395 million, and non-GAAP earnings rose 44% to $0.26 per diluted share. Those results are particularly impressive because Alphabet grew revenue by just 6% in the same quarter, while Meta actually saw revenue decline by 4%. Hmm. Going forward, the trade desk is set to maintain its momentum. Global digital ad spend is expected to increase at 9.2% annually to reach $1.3 trillion by the end of the decade. And consulting specialist Quadrant Knowledge Solutions recently recognized the trade desk as a leader in the ad tech industry, citing a higher degree of technological excellence compared to other vendors. Currently, shares trade at 17.3 times sales, a discounted 3-year average of 30.4 times sales. That's why this growth stock is worth buying today. Atlassian Corporation. Mm. Okay, let's look at the Trade Desk YouTube one more time. It's what I saw last time, but just for fun, let's look at it one more time, okay? Hmm. The future of TV today. The Trade Desk and Fox discover. Okay. Hmm. How is the Trade Desk in change the future of advertising? Okay, let's look at this one. It's an interview done by. Okay. This it looks like this interview is done when CES or whatever was held a long time ago. Not long time ago, like 3 weeks ago. It was posted. Um, let's see how this interview goes. Hmm. So customers think that they would see ads and pay less. 1,000 active clients buying ads on platform. 1,000 active clients buying ads on platform represents over 50,000 advertisers. Hmm. Hmm. Okay. First of all, they got their own YouTube channel, and in that YouTube channel, CEO um actually speaks um and talks about their business and like what they provide. Unlike it's interesting because like uh this company is pretty big, but then uh CEO like him like still appears in YouTube and talks. The fact that he appears in YouTube is really interesting because he could possibly be so busy, right? Dealing with all the hassles with business, but then he's still there. Mm. That proves that he cares about his business and that he's really sincere. Mm. Okay. The one that I'm going to watch this, the one that I'm going to watch, this video clip is about programmatic auction. Uh, how their mm, business model. So, as to say, their advertising model is how their business model is different from other ad tech companies. Demand side platforms, demand side. 10th of a second. Interesting. How and who see their ads? Okay. Let me explain this in my own term. The old way uh, was normally advertisement or whatever was provided by server, and then it was given to the customer directly. But then new version made by the trade desk uh, goes through beating system. Uh, like unlike the one where um, transaction was pretty straightforward. This new version um, is a bit complicated. Well, it's not really complicated, but like there's like a intermediary, between customer and demand side platform. And demand side platform That's the place where beating happens, and then it goes to intersection, and then at the end it goes to the customer, and customer gets to see relevant mm, advertisement, and then um, in return, demand side platform, mm, blah blah blah. Anyway, it's something like that. Um, there's like a difference in that perspective. Hmm. Okay, one more time. Okay. Used by advertisers. Demand side platform. Okay, it's a bit complicated, but let me skip this point. Okay. Let's get to it next time. Okay. Let's go over to Atlancia. Atlancia specializes in team collaboration and productivity software. Its portfolio includes solutions for work management, IT service management, and enterprise planning. The company is best known for its Jira suite. One of the most noteworthy things about Atlancia is its go-to-market strategy. Whereas most vendors rely on traditional marketing and direct sales teams, Atlassian primarily sells its product through self-service channels, and it relies heavily on word-of-mouth marketing. The approach has allowed the company to spend more money on product development, um, and the results speak for themselves. In 2021, Forrest Research recognized Atlassian as a leader in enterprise service management, citing a stronger growth strategy than any other company. In 2022, research company Gartner named Atlassian leader enterprise agile planning tools, a leader in enterprise agile planning tools. More recently, software research, especially G2, recognized Atlassian as a leader in product management, bug tracking, and knowledge management. In fact, G2 named Atlassian the seventh best global software seller in any category last year, a distinction that reflects high user satisfaction scores and a strong presence in several markets. Building on that, Atlassian offers a broad range of solutions through a single platform, unifying technical teams in IT, engineering, and operations with non-technical teams in marketing, human resources, and finance. No other vendor provides that convenience. Mm. Additionally, Atlassian provides multiple work management products, Jira Work Management, Trello, and Confluence tailored to different use cases that gives each company an agile or single product vendors. Reported mixed results in the most recent quarter. Revenue increased 31% to $807 million, and free cash flow climbed 31% to $76 million. Management noted that free users were converting to paid customers more slowly and that existing customers were adding new users more slowly. That trend will likely persist until economic conditions improve, and it will likely lead to slower growth in the coming quarters. However, Atlassian remains well positioned to create a value for shareholders in the long run. Management says its $29 billion total addressable market grew 14% annually, and the company has a compelling value proposition. Its product help business work and collaborate more efficiently. Okay, getting inside look at what life is like for Atlanteans around the world. Okay, let's see this one. Okay. Okay. All they talk about is the service they provide, and like the main service they provide is a teamwork. Um, their goal is to mm, that team uh do their work efficiently. Mm. And all of the team members are focused on that point, on that goal. Mm. Remains well positioned to create value for shareholders in the long run. Management said a $29 billion total addressable market grew 14% annually, and the company has a compelling value proposition. Its products help business work and collaborate more effectively. Jira, I guess, Jira is the main service they provide. Mm. Shares currently trade at 13.9 times sales, discounted at 3-year average of 28.3 times sales. Investors should buy a small position in this growth stock. Buffett once said he wasn't an idiot for not buying the stock sooner. Why has Amazon stock gotten so cheap? The overall business will swing back to posting much better overall profit margins as challenges ease and reward from investment and growth initiatives begin to play a bigger role in shaping bottom line performance. Hmm. Okay, we got a lot of articles to read, but I'm gonna have to do something, so I'll be coming back tomorrow and I'll talk a lot about something else, okay? I'll see you guys and have a good night. Bye bye.